The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 21st fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance, otherwise known as Santa Claus Rally Rhodes out there, and I believe we should always be pioneers of our future and never, ever be prisoners of our past. And, of course, the best way to do that, folks, is to always remember that life happens for us, not to us. And we can make that one little switch out there. It makes all the difference in the world. I want to make all the difference in your world out there. Of course, I am grateful for your presence here today. This is an interactive show. That means we would love to hear from you. Reach out to us by calling us 877-927-6648. Internationally, you can reach out at 727-445-1044. Together, you and I, we can go looking for bulls and bears. It's pretty tough to find the bears out there. They are certainly getting trampled. The Santa Claus rally continues big off of the bottom in October 15th. Continued big movement here this morning. Right now, we got Dow futures up 152 points. They're trading out at 17,846. S&P futures up about 0.8%. They're up 1750. NASDAQ up 33 points. Russell 2000 up big. Also up big is the King. The King and I. The King dollar up 56 pennies, 560 ticks out there. Of course, that is courtesy of Mario Draghi. Well, it's courtesy of a couple things but primarily Mario Draghi out there. Now, I want to show you something. Most of you probably know by now that Mario Draghi was out on the stump, giving some speech today at about 3:30 this morning. I happened to be up, I think I woke up at about 4. Just to see what the reaction was. I didn't really wake up to see what the reaction was, but I was up and wanted to see what was going on in the markets. And here's the interesting thing here, because Super Mario, he's got not everybody snowed. He doesn't have me snowed out there, and I know he doesn't have you snowed as well. But I'm not going to use the word that I'm not going to say he's a joke. Here's what I'm going to say. Okay, because I would never say anything really disparaging about anybody. It's just not. It's poor. But if we just take a look at what he does say versus what he does do, okay? Here is, and it's so easy, all the data's out there. Here's the European Central Banking System. So here's the Euro system out here. And if we want to take a look at what the balance sheet is, this is back, by the way, this is September 2012. So I'm just going back to data that's been posted out here. If we go take a look at September 2012, and we just simply come here and take a look at the combined area, we'll take a look at total assets. If you're watching this on TigerTV, you can see this stuff in detail right now. Forget about whether this is billions or trillions. It doesn't really matter. 33, we'll just call it 33,915. Okay, this is like 33 trillion, I think, but I don't remember the exact number of zeros going out here. Maybe it's 33 billion, okay? But 33,915, that's the number. Let's go fast forward. That's their balance sheet. That's the size of their balance sheet. This guy has been telling people that he's going to be increasing the size of their balance sheet. That was September 2012. All I've got, the latest release of information, is September 2014, right? So 2 months ago. Let me come all the way back down here and take a look at their assets. It has shrunk, folks. He's not increasing it. He is the biggest BSer before Steve artist that exists. Maybe not the biggest, but he's certainly one of the biggest out there. So it is. And you know what? The folks that are inside the gold market. So we've got the euro that's moving down. Got a lot of things moving. So let's take a look at them. If we take a look at the euro out here, let's take a look at the euro futures. Let's start off by looking at that. And we can see here right now is really from the session low out here from back on November 7th, 2014, last time that the euro put in a low, to the high that was put in here back on November the 19th. Price is sitting right now at the 0.786 retracement. That's at 1.2413 or 1.2412. So you're really sitting at it right now. This is a fairly key level of support. If this gives way, we'll see the euro move down lower, 1.2361. That will go ahead and put strength inside of the U.S. dollar index. Now, currencies rule the world out here, but there's people out there that know that what he says and what he does, two totally different things out here. And that's what's so interesting, really, when we take a look at what's going on inside the gold, silver, even light sweet crude complex out here. Copper, platinum. Platinum's up 2%, the silver's up 2%, gold's only up 1%, but gold has been moving. If we take a look, I've got the continuous contract. I'm not going to switch screens out here. It doesn't really matter at this stage. But if we just simply, what gold has done, and the key level to be watching inside Goldilocks today is 1207.80. With the U.S. dollar index being up the way that it is, either somebody's wrong here. Either the euro is, when he talks about his ability to weaken the euro versus the reality of what it is that he does out there, two totally different things. So we'll see if the euro can hold these lows out there. You see, when I take a look at the information, it's released every Friday afternoon by the CFTC. Those guys, the big money, is saying BS. It just simply is. It's saying that the U.S. dollar index, believe it or not, is still going to fall. The euro's going to move higher out there, and that, it's nothing more than just a simple little marketing machine out there, and a good one, a very good one. And most people don't do the homework. That's the thing. Most people won't spend the time to do the homework, but not here at TFNN. We will do that homework for you. And speaking of doing that homework for you, if you would like to get access to all the homework that I've done, I've gotten several emails, a couple of emails, with regard to my 7-week workshop that begins tomorrow morning at 9 o'clock. I've gotten emails from folks that are just beginners, and they're saying, if I'm just beginning, is this stuff going to be way too much? Is this going to be way above my head? Folks, if I were just beginning, this is exactly where I would want to start. I would want somebody to direct me exactly what it is that I need to know, because there's nothing more valuable than time, and I'm going to be able to condense decades, when really decades with regard to people who've traded patterns out there. But I'm going to be able to condense those 10,000 hours that I've worked on into this 7-week workshop. So this is the best place to start. Likewise, I've had emails from folks that are very skilled technicians. They're familiar with the A to B equals CD pattern. Some elements of it they don't really understand, or maybe they've read H.M. Gartley's book. Maybe they've taken a look at page 222 or page 249. Those are a couple of important pages out there. And folks, here's the way that things work in the world. Each of us, when we take a look at everything that is at our fingertips, what we've got is not really, for the most part, what was built by the inventor. Look, the iPod wasn't invented. Putting music on a hard drive out there, whether it's portable or not, wasn't invented by Steve Jobs. He just did a better job of being able to market it. Now, someone might say, I'm doing a better job of marketing my services out here. Here's what is important for you to understand. What I've done is I've taken the tools of H.M. Gartley, I've taken the work of Tom, of Larry, and I've spent my time identifying patterns that even the original artists really didn't understand. Isn't that really how things work? Isn't that why we have the computers today versus the ones that I sold back in 1983? Two totally different things out there. Things are always improving. So even for the individual that has extraordinary technical skills, they will garner so much more information out of this workshop, the 7-week workshop. So look, it's all the details on the homepage at TFNN.com. $395 is the cost. Now, here's the deal. Tough time of the year. Thanksgiving, Christmas, Hanukkah. It's all coming. It's right around the corner. You're going to be sitting at a table. I hope you're going to be sitting at a table, and some loved one is going to say, because there's going to be talk about Black Friday and all those things out there, somebody's going to say, what would you like this year? And here's the deal. Instead of getting something that you really don't need, ask them for the gift of education. Go ahead and pay for it up front. Slide over to them on the table there a couple of gift envelopes so that they can really, and you can tell them what you've done. And you can tell them that the reality is that you're going to be able to touch their lives, because I want you to be able to take what I share with you and share it with them. Gold, right now, 0.618 retracement, 1207.80. That is going to be the key level. If we see Goldilocks get above 1207.80, 1228 becomes the next floor where we'll see gold move up to. If we take a look at this silver right now, you got silver trading up about 2%. Silver's trading out at 1647. If we take a look at retracements from the standpoint of silver, it'd probably just simply come out here and just grab this swing point high from October 15th down to the low that was put in on November 7th. Silver's on its way to 1675. 1675 is its 0.618 retracement level. If we take a look at light sweet crude, is light sweet crude trying to form a bottom here? Light sweet crude is one I have a little, gold and silver, yes. Light sweet crude, Let's take a look at what. Let me switch over to the actual contract here just to make sure. Let me switch over to the light sweet crude, which is the January contract that we're going to take a look at. Yeah, and so if I take a look at the daily contract here, what I would note inside of light sweet crude is if it can close above the 70, it's trading right now at 76.82. I would say if light sweet crude can close above, I'd say at its session highs. Its session high so far has been 77.83. You close above 77.83, and I start to become a believer. So there's a couple of moving average lines out here, 8 and 13, two numbers inside the Fibonacci summation sequence out here. So I like using those two moving average lines. They really help to identify momentum. Lagging indicators, but what this does show us is that we've only seen price close above that 13-day exponential moving average on this trip down here for four sessions. So even closing above it today doesn't mean you're out of the woods, but it is an indication of it trying to truly change its trend. If it closes right here, the answer is no, it really hasn't changed trend out there. Different story inside of gold, different story inside of silver. Now, we haven't even gotten to our futures market out here. Let's go do that. Let's go take a look at it. Of course, you know that, I believe that all the signals, when I trade what I see out here, these markets are going to continue to run higher into the end of the year. That doesn't mean we won't see some retracements out here. But if we take a look at the NASDAQ right now, we'll take a look at what it is doing. It's up above its 1.272 expansion of its last set of major swing points. There's a confirmed A to B equals CD to the upside inside the NASDAQ out here. Where's that going to take us to? Well, that first price projection, the 1-to-1, as well as the 1.6 expansion of that set of swing points takes us up to 43.87. The NASDAQ does not, we don't see a pop and a drop, and I don't see it coming. Anything can happen. I don't see it coming as we speak right now. As long as the NQ closes above 42.37, then another 100 points higher is where its target is at the 43.87. You are at 42.78 as we speak right now. If we go take a look at the ES Mini, the S&P futures out here, let's go take a look at their 1-to-1 A to B equals CD to the upside. Give you the price projection there. Of course, that A point out here, that is going, well, I would put it out here if I got to turn the switch on my system. Didn't realize the switch was off. Let me turn that on. Where did it go? Oh, that's really odd. I must have deleted the whole thing out here. Well, I can always insert the study. I hate to do that with 1 minute to go, but that's the deal out here. Let's take a look. I'll come back and I'll give you the A to B equals CD to the upside afterwards. Let's take a look at the expansion of swing points out here. That expansion that we're going to look at is going to come from the September 19th high down to the low out here. Excuse me. A little gust mite. Right now, you're at the 1.272. Sorry about that. 2,069 is the exact 1.272 expansion. You're sitting there right now. You get above that, 2139 is in the cards for the S&P futures. This is Steve Rhodes at TFNN. I'll get rid of that dust mite, and then you come right back. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 161, S&P up 18. Let's go out to the city of brotherly love, to one that we love so much, John from Philly. John, how you doing this morning?
Good morning, Steve. Thanks for all you do, sir.
Thank you. Thank you.
Hey, did you happen to notice yesterday on the S&P futures, the dip that occurred right as 9:30 rolled around down at 2035? That was right at a Fib 618 retracement against the low of last Monday.
I did not. What I did notice, though, was that on the 5-minute chart, it got to a trough G, which is probably that 0.618 retracement.
The stars are aligned. One thing this does show is that patterns and numbers do work.
They do.
And so I just had to point that out. One thing I wanted to touch base with you and your listeners here today is just the dynamic nature of this rally phase.
Yes.
I posted in the Tiger's Den for you and your listeners the S&P weekly chart, the candlestick chart. And what you can see now, we're in the 5th week off that low of October.
Yes.
And each one of these weekly bars is a wide-ranging rally bar, just all strung together. And, Steve, I just can't help but think that this is strong evidence that we're entering a rally phase that truly just goes exponential, very much akin to what happened after the October 1998 bottom. You recall back in 98, there was a stiff setback from July to October, and then from that October low, that was the days of the internet mania, and Y2K was approaching, and stocks just exploded. And the phenomena that I've studied and researched about markets that go into just panic buying mode is that they occur after long bull phases have already been in progress and cap off and complete the phase. And when they start, they kick off with an 8 to 16-week period of time in which the weekly candlestick charts just show this wide-ranging rally phenomenon to kick it off. And I just can't help but think that this is what we're dealing with. And then October 31st, we had the Bank of Japan saying we're going to print more money and buy more stocks. Then the week of November 3rd, the ECB said they were going to do something kind of directional along those lines.
Right.
And, of course, this morning the People's Bank of China comes in, and I'd be remiss if I didn't point out to your listeners that last Friday was the meeting in Brisbane, Australia,
yes,
of all the powerful on the planet, and I can't help but think that all this is just coordinated, and it's just a very strong, powerful situation. Wanted to see what you thought.
Well, so you bring up 1998, and so it's interesting here for folks watching us on Tiger TV. When I take a look at the low that John is talking about, the week of October 5th, 1998. Now, I've got horizontal lines going across my screen, and it's a weekly chart that I'm showing. Now, the horizontal lines going across my screen, these are the horizontal trading range boundary lines, and price typically trades within these areas. Once it breaks through one level, comes back, tests it. If it rejects it, it continues on to the next level. Now, if we take a look at the candle that was actually formed, John, October 5th, 1998, it looks so close to a hammer candle. It's actually not, but it's close enough. We're going to go ahead and give it the benefit of the doubt. We'll call it a hammer, which is really what formed back here at our lows back in October. We can see the movement now. In this case here, we're up above swing points already. And back in 1998, it took until it got back above the July 20th level. We're in essence, in theory, really already above that if we're going to try to correlate our September highs out there. And what I think about that is you were the one that really pointed out to me this phase transition process, maybe the last leg up inside of the market out here. We were taking a look at cotton, silver, and I believe the NDX 100. But there's no question that when we take a look at, if we go back and just use your conclusion and fast forward it to where we're at today and take a look at the candle formation that's out here, what's also interesting is that price came right down in October and it tested a horizontal trading range, 1849, which held. This says to me, and if your theory is right, and I buy into it, 2140 is the next stop for the S&P 500.
Christmas time.
Love you, brother.
Thanks. See ya.
Thanks so much for calling in. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 150, trade out at 17,869, S&P up 16 at 2,068, Composite up 46 points, trade out at 47.48, Russell 2,000 up 13, DAX up 222 points, FTSE up 82, Goldilocks up 12, silver up 32 cents out here, light sweet crude up 59 cents, leading the charge the upside, Regeneron Pharmaceuticals up $9, up a couple of percent, Hibbett Sports Inc., HIBB, I think that may be an IPO from yesterday, up 12%. Splunk, which was down in the pre-market yesterday, I think they were down. Maybe they weren't. They're up. Whether they were or they weren't, they're up about 8% here this morning, up $5. Ross Stores up about $5 as well. Baidu up 5. Amazon up $4.70. Pioneer Natural Resources up 4. Wind Resorts up 3. Google up $3 and change. To the downside, GameStop, GME off about 10% this morning, down $4.50. MOL Global, MOLG is the ticker symbol. Geez, what do they do? Is it maybe they're down 37% out here. I don't see the, let me see, what is this here? Boy, down with some volume, too. Leading payment enabler for online goods and services, emerging and developing markets today announced that the company has rescheduled the date it plans to release its third quarter financials. That's never a good thing out there when you can't get your financials out in time out here. So that thing is selling off. You've got the Rubin Networks down $1.78. The Gap, a GPS, is the ticker symbol, down 4% off $1.60. Again, our call number 877-927-6648. I'm going to switch over. I'm going to go back to that weekly chart that John and I were talking about before the breakout here. Now, Bud Rolfs, talk about technology, difference between being able to, what I consider to be able to improve upon a tool that worked in the past, just like everything that we've got out there. That's what I've done with regard to the lightning bolt pattern. That's why the workshop that I'm holding tomorrow is so very important if you trade the A to B equals CD pattern, or if you want to really understand the divergences out there when they give us signals to go ahead and go long or short. Here's another tool out here that some great folks have assisted me with. I'm going to get an interview in the next couple of weeks with these guys out here because they're so good. Now, in the case of primary trading ranges, which is what Bud takes a look at, what he's looking at is co-located opens and closes. He's pretty much starting with the monthly charts out there, and he's carrying that forward. Now, he's using either an open or a close. Now, with he had to do all that visually. And thank goodness he did that, and he shared that tool with us. Now, from an electronic standpoint, I've been able to automate that. Now, not me personally, but I was able to automate that with this great group of programmers out here. And if we take a look at it, what this tool is doing, we're looking at a weekly chart here, and I can change to all different time frames. You see, the open and close of a body of a candle is going to be different on a weekly chart than it is on a monthly chart, than it is on a daily chart out there. And that's really what this setup here has. So I can turn on this chart, on the weekly chart as an example. If I want to see what those primary trading range boundaries are for the monthly, all I have to do is come over, click a button. They'll show up in red out here, so I'll have both the yellow and the red. And that way I understand where there's natural areas of support and resistance. Well, if you take a look at the little dash line out here, this is the S&P 500. Weekly time frame is what we're showing. I now have both the weekly and the monthly horizontal trading ranges, so a little bit different, a little nuanced from what Bud's work out there. Take a look at the S&P, which, as it was moving down back in October, got below the 1849, but from a weekly standpoint, closed back above it with a candle that looks so similar. So this one's a hammer candle, and it's very close back in 1998. I said, we'll give it the benefit of the doubt. It may have had just a little bit too much of a wick out there, you know, as John was pointing out, how that really, I mean, you want to take a look at a analog. This is a really good analog to take a look at. Here's what we know for sure. I'm going to go ahead and turn off the monthly PTRs at the moment, because we're just really looking at the weekly chart, or the horizontal trading ranges out here. 2082 is the next stop on a weekly basis, and really once we get above that, so that could be some resistance. We could see price get up to this level, start to move sideways. If you just take a note, just take notice here of how these horizontal trading range areas work. I mean, it is so cool, so good with regard to where we're identifying levels of natural support or resistance. Of course, ideally, what you want to see, what the bulls, what Santa Claus wants to see, Santa Claus wants to see price get above 2082.32. I think that's a midpoint out there. Just got it as a solid line, and then test it, come back, test it, and then boom, off to 22.45. So 2082, that may be, it's another about 9 points higher, 11 points, 9, 10, 11 points higher than where we're at right now. I would expect that the S&P is probably just going to hover right around this area maybe by the end of today. It's a natural area of resistance that is inside the S&P 500. Now, let's go take a look at some things here that are moving and grooving in the marketplace. Let's go take a look at Regenerate Pharmaceuticals. Let's go see what it is doing. It's up a couple of percent, up $8 right now. It's got an A to B equals CD pattern that it has completed, but it's completed it on what I like to call the strong side. This says that Regenerate Pharmaceuticals, once it clears 419.87, she'll be on her way to the 447 level. That is ticker symbol REGN. That's on its A to B equals CD pattern. If we take a look at Amazon, of course, made that beautiful bottom at that 285 level. Most folks considered that to be a high volume low, and it was going to blow through that area. But what you and I know is that was just simply coming down to the bottom of a long-term rising price channel out there. That level has held. Where's Amazon headed to right now? Well, Amazon is headed right back into this swing point here from September the 4th. And that high is at 349.38. The low is at 343.58. If Amazon's already got an A to B equals CD, the B point of the small one. Let's just put that up on the screen for you. So let's take a look at that one. That's coming off of that low from October 24th. That's your A point. Your B point is out here on November the 3rd. Retracement down into the November 6th area, about a 0.618. Amazon headed up to the 1 to 2 A to B equals CD. That's at the 340.31. I suspect Amazon ought to get a little bit tired as it gets into that September 4th swing point, but we'll find out. 743,000 shares is pretty darn good considering September 4th has 3.9 million shares. Now, you're not into it yet, but that is the target for ticker symbol AMZN, Amazon. If we take a look at Ross Stores, they were out with numbers after the bell last night. This thing has gapped higher, substantially gapped higher out here. This is above its 1.272 expansion of a set of swing points, a fairly major set of swing points. That's the ones coming back from November 18, 2013 at the high, and the low being July 17, 2014. Up above this level, if Ross Stores can hold this area, Ross wants to head to 94.45 out there. And that's what it is doing pattern-wise. Splunk, let's go take a look at Splunk, SPLK, up 7% as we speak this morning. Now, Splunk was moving down in the pre-market yesterday. I know that because we took a look at this and said, boy, if this thing ever pulled back to 48.55, that would be the price to get it at. So it gapped up this morning. It has been selling off a bit out here, but if we pull this back a little bit further left out here, we just see what this thing has done from its high to its lows, retracement-wise. The high out here being the trading session of February 28th, down to the low out here on June the 3rd. You know, it's up above its 0.382 retracement. As long as it can hold these highs here, and it's got pretty decent volume here this morning, $80.63 mathematically ought to be its next target out there. Let's take a look at GameStop. GME is the ticker symbol. That is trading lower this morning. GameStop probably headed for its swing point out here. Well, it's already trading into it, so it's definitely headed there. That's from October the 15th. There were 3.7 million shares there. Today it's got 2.5. GameStop should get down and test 35.82. If it takes that out with volume, that sets up an A to B equals CD to the downside. MOLG, Mole Global, down 33%. This is the company that said, hey, they got to oh, this is terrible. These guys here, this is horrible. These guys, look, this is an IPO that from October 9th, and these guys are struggling to get their financials out. They should be, oh my goodness, how about that? In any event, I hope none of our listeners out there are inside of that equity. Wesco Aircraft Holdings down 12% off $2 as we speak right now. Looks like they're out with numbers as well. 24.6 million to the bottom line. That's versus 29 from the last third or fourth quarter numbers out there. They've also sales. They doubled sales. And they have got, they must be spending money left and right out here. If we go take a look and see what the stockholders are unhappy about, well, that's it. This thing here is trading, well below a breakout session from way back in May of 2013. Let's put this thing on a weekly basis here. So this is Wesco Aircraft Holdings, and I don't like to talk about aircrafts that are crashing, but this one is doing a pretty good job of it. This thing is all the way back to its IPO price. How about that? And that looks like July of 2011. That high was $15.15. You're trading right now at $14.88. So where is this headed down to? Well, the last sign of strength out here where it really broke out from was back in April of 2013. The low there was $14.70. You're at $14.88. If it does not hold that area, it probably gets down into the $12 range out there. That is ticker symbol WAIR. Let's take a look at Aruba Networks, down 8% here. Let me see if they were out with numbers. Looks like 2.7 million in net income versus a $7.8 million loss, so that's good. What are they doing revenue-wise out here? Revenue is $207 million versus $160. So they must be guiding light out here. ARUN is the ticker symbol, off 8% this morning. Let's put this on a daily chart out here. Well, this has got a high, first of all, it's got a high volume low out here that has not been tested. So if Aruba Networks decides to fall off of the Planet, well, the Planet for its stock chart says it ought to get down and test $12.38. That's what the weekly is showing. Let's go see what the daily is showing out here, see if there's any other support along the way. Right now, gapping down. It is not tested its swing point, its most recent swing point, which is from October 14th. No surprise there. That's 2.3 million shares. It's done 1.4 million shares today. Aruba Networks is at a minimum headed for that. That is at 1862 to 1955 out here. Not looking so hot. Dow's up 150, S&P is up 17, composites up 37, gold up $13, silver up 33 cents. Let's go take a look at some of the mining equities out here, see how they are doing. Let's take a look at Randgold. GOLD is the ticker symbol. It's trading up at $70.41. It's trying to take out a B point. Let's see if it can do that today here with some kind of volume. The B point, let me pull this off to the side, happens to be the trading session from November 18th. Volume there, 1.5 million shares. We've been trading for 16 minutes, 136,000 shares. Let me take that, multiply times 4, get me to about 3, 6, and 6. That's got 3 million shares written all over it. Well, of course, we know that most of the volume takes place early morning. Hey, only 1.5 million shares out there. So it closed today above 70.40 inside of Randgold. That will have a very large confirmed A to B equals CD to the upside. Look, just closing above 70.18. You're just slightly above it right now at 70.29. Says that the 77.71 price target, your 0.618 retracement, would be in its sights out there. That's going on in Randgold. Let's take a look at Gold Corp, numero uno holding inside of the GDX, inside of the XAU. Randgold here, looking for it to give some kind of message today. It has not given that message. It's trading out at 20.83. Yes, it's trading up a bit. What Gold Corp needs to do is bust through 21.42. That is pièce de résistance. That's the resistance line from the gap down and that was the low of October 29th. That low is 21.42. It gaps down during the vomit session out there. That's when just simply the different mutual funds, large money operators were just simply didn't want to have certain equities inside their portfolio as they went to their fiscal year and October 31st numbers out here. And but in the case of Gold Corp, if it can break, that's had 21 million shares, by the way, when it was just really throwing up. Nonetheless, you close above 21.42. That will put fire in those of you that have the GDX or you've got the NUGT. That's really one of the things that you are looking for is you want Gold Corp to giddy up and go. Another one that you're going to want to get to giddy up and go is going to be Barrick Gold, ABX. It looks very similar to, you'd almost think I've got the Gold Corp chart up on my screen. What does it need to really do? Well, if it can close above the November 18th high, that's at 1332, 26 million shares. You've done 1.5 today, 3, 6, 6. You could have the volume, but it's got to truly get up and go. If it does do that, you get above that, you've got an A to B equals CD to the upside out there. That is on Barrick Gold. So some miners doing better than others out here. Let's take a look at Goldfields. Goldfields being one of those. That's up 24 cents as we speak. What is Goldfields doing? If we take a look, well, I can tell you where Goldfields is headed to. It's headed back to this swing point out here from August 29th and September 2nd. You've got some nice volume out there. If we take a look at retracements inside of Goldfields from high to low, it's headed to $4.54. That's your 0.786 retracement. This is Steve Rhodes. This is TFNN. And I say, ho, 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 ho. Santa Claus rally continues to motor on. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 162, S&P up 18, composite up 36 points out there, gold up 12, silver up 33 cents out here. Let's go take a look at the VIX index. Summation index, try to put all this in perspective, see what the VIX is doing here. So today, just tell you what I'm looking for. I'm looking for the VIX index to actually get back below the November 10th low out there, at least pierce it. And that low is 1238. We're not anywhere near there. You're at 1329. It doesn't have to necessarily do it today, but it would have made sense for it to do that. The reason being is that without it doing that, I still, in essence, really still have a rising VIX indice. And when you have a rising VIX and you've got a rising market, that doesn't end really. That says that you still have a potential retracement coming out. Well, no, we're going to have retracements out here. Just as an example, I'll put this chart up on the screen. I'm just going to adjust the numbers a little bit. But we can see clearly here we still have a rising VIX, and we've got a market that's moving higher. And every time that pattern is out there, look, folks, what we're talking about, this rally is going to continue. It's going to go on through the end of the year. There's going to be buyable bottoms along the way. There's going to be retracements. Like John and I talked during the second segment. Hey, Steve, did you notice that it was a 0.618 retracement inside the ES Mini, off of a set of swing points out there? That's what the markets do. They expand and they contract. That's why you want to understand these Fibonacci numbers. That's why you want to understand these A to B equals CD patterns. Number one, they can help you to get into trades. They help you with regard to price targets, because every trade that you enter, you want to make sure that you've got a one cancels other. You want to have both sides of the trade. Now, what does this tell us here with a rising VIX bottom and a market that's moving higher? Well, if this pattern were to play out in the past, it says, okay, some kind of retracement could be coming our way. Maybe in advance, people know that there's going to be some kind of disappointment somewhere. Thanksgiving, the week of Thanksgiving is predominantly a week that's going to move higher as well. But let's just not, get into that. In any event, here's one thing that we certainly want to pay attention to, and that's going to be the VIX index. I know Basil will touch on that during his show as well. If we take a look at the summation index out here, yesterday, what we saw both in the New York Stock Exchange and the composite really touch and go. Touch and go, what I mean is we saw the price oscillator move down to the zero line. Inside the New York Stock Exchange, it just got slightly below that. That was on Wednesday, at the close of Wednesday. Yesterday was a rejection of that area. Today is a clear rejection of that area. Therefore, I'm not so worried here about the declining tops pattern that was in place. I'm not going to move it over, to this spot right here to where we're at today and say, hey, we still have that pattern in play. No, it's really done its work. In essence, it just actually shows you just how strong under the covers the New York Stock Exchange. And, of course, we know just the strength, because the more unusual of all the patterns was this one, was to have done what it did with this rising price oscillator. That rising price oscillator, that's the green line that I just drew across my screen out here, that was the indication of an initiation move that is in place. So it's just the initiation. Everything is truly falling into place out here. We are not anywhere near the end of this move to the upside. Intra-session, a whole different trading scenario out there. So, folks, if you'd like to understand these patterns, learn about these patterns, there is not going to be a better time. Don't know if I'll do this again. That is this 7-week workshop that I'm holding. Begins tomorrow morning, 9 o'clock. It is definitely not too late to get in. If you can't be there, it's okay. It'll be archived. This is a mentoring. This is a coaching. This is a hand-holding program out there. It's going to be fantastic. And I sure hope that if you are on the fence, then jump off the fence, get over to the homepage at TFNN.com. Hey, Thanksgiving. Tell folks you want the gift of education. It all begins mañana, tomorrow. Look forward to seeing you there. Have a great Friday. Look forward to seeing you Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.